No, please.
When are you expected back, darling?
I think in June I'll be back.
Okay. Hi, Sanya. Hello, Danish.
Hi, ma'am.
તમે લોકો ના એટલા ફિક્કા હાય બોલો they will wonder what sort of relationship we have. પહેલે તો no smiles. Then all this serious sort of hi ma'am. I should put screenshots of my WhatsApp chats with y'all. Chalo, I hope you all have a great class, okay? Love you. God bless you.
Thank you.
Thank you, ma'am. Bye.
Yeah, thank you so much, Shreyas. Good to have you with us.
I heard about what happened in the last class. We're still trying to figure it out. So sorry about that.
No worries.
Hopefully today will go off uneventful.
Yeah, of course. Okay, thank you so much. So hi everybody, good evening. How are you all? I'm seeing you all after quite a long time. I joined sometime and I get to meet you all. And whenever I get to meet all of you, it's always such a delight. Yeah. Okay, so how are you all doing? Are you busy with your exams? You got done with them? How are things with all of you? We can start maybe in alphabetical order. Everybody can tell how their day was, what was the highlight of your day, and then we'll start. Let's do this activity today. I'll also share. You want me to go first, or if somebody else wants to? I also have to think what was the highlight of the day. Mm, okay. I think my day is going well. A little hectic, but apart from that, it's going really well. Um, Highlight of the day would be I think the days have been getting very hectic for me lately, but I just was able to have my lunch properly, mindfully, and just being into it, being very much present while eating. So I think I would call it a highlight of the day for me. Yes. So far, so good. Yeah. Okay. Let's start with. I think Danish, your like D comes first, so you go.
Yes, please. So my day was also, it was not hectic, but it was okay. And I was not having lots of work to do, but yeah, it was a chill day and it was a smooth day for me till now.
Great. I hope it goes like this, the
Yes,
rest of it
please.
as well. Perfect. Who would like to go next? Danish, you can pass the mic to somebody.
Wow, that will be much interesting then. Okay, so I'd like to pass the mic to Sakshi.
Okay, so my day is also good because since I have a holiday and my exams have ended, so because of that I can sleep till late, like wake up late. So that's why I feel little more energetic as usual because I get to sleep more than usual. So that's why.
Sleep is the best thing.
Yes, please.
I look forward to it after work.
So I would
Um,
like to. Okay, shall I?
Yes, you can pass the mic to somebody.
Okay, I would like to pass the mic to Moita, please.
The highlight of the day for me is my brother returned home from my uh, relative's house after a one whole week, and I see both of them faces. So that was the highlight of my day because we spent days after a 1 week. So we played, we talked about things. That was the happiest day for me a whole week.
Wow,
Thank you.
that's so nice. I feel moments like this are so, so precious. That's so nice. Thanks for sharing, Moita.
Thank you. I would like to pass my Shamna.
So my days like it's so good. I'm in village enjoying my holidays with my grandmother. So it's good. Like nothing headache or something, nothing. Just good.
That's good. That's really nice. Great.
I would like to give my mic to Jasmine.
Jasmine, I cannot hear you.
Am I audible?
Yeah, now
Hello.
you're audible.
Yes, so my day was good and little bit boring because there was not much work to do. And I'm very excited for tomorrow because we have our Saturday session. That's thank you. And I would like to pass the mic Sejali.
Thank you, Jasmine. I just wanted to check, am I audible?
Very clearly. Yeah.
Yes, thank you. So the highlight of my day was the Friday lunch that we get at office. So every Friday we have office lunch. So today it was Bengali cuisine, so it was very delicious. So that was the highlight. And I would like to pass the mic to Fatima.
Uh, Hello everyone. My day is good because little bit good because colleges is a holiday and it's a boring day. Thank you.
So are you liking it because it's a boring day, or you're not liking it?
Not liking it.
You're not like you like to be busy.
Yes, please.
Okay, got it. Maybe the college has just ended. I think you had exams earlier.
Yes, please.
Yeah, it's okay. Such days are also important. Otherwise, if you are just into that rush life, you won't enjoy it after some point. So whenever we get a boring day, enjoy it because then it becomes really hectic. Okay, great. You want to pass the mic to somebody?
Or Sania Didi.
Hello, ma'am. So my day is going bit fun, I can say. So whenever I done with my household chores, I play fun. Like also missing college a little bit more. Like I'm at home right now and I'm done. Like I'm recently graduated. So yes.
Congratulations, Anya. You recently graduated.
Thank you. I would like to pass my mic to Lakshmi, please.
Am I audible?
Yes, Lakshmi.
Thank you. Yes, my day was really good. Like I just spending time with my family, like especially with my mother. It was good.
Great. Good to know that, Lakshmi. I think we are left with only Mansi. Yeah.
So my day went meaningful, I would say, because I spent like good time in studies.
Oh, wow. Yes, I
Thank
think we can really call it a meaningful day. Great. Okay, perfect. I think it was nice knowing how everybody's day was, everybody sharing the highlights of their day, and I just realized that these highlights are the small little things, that we sometimes miss out on. And that's what I was able to gather. It's really nice to know that. Okay, so now that, we have known each other, we have understood how our day was, let's move into today's session. So today's session is somewhat a continuation of what you guys did last time. So would anybody like to share what you did last time? What were your takeaways? Anything new you got to know? Anybody? Yes, Danish, go ahead.
Yes, please. In the last session, we did a bit of uh, data analysis part, like the trainer taught us about IPL cricket, and we got to know about a simple tally sheet, how to create your own dashboard using Google Sheets by your own data. And yes, it was mainly talked about the cricket scores and the charts, please.
Yeah, perfect. That's actually very much apt. Somebody wants to add on? Yeah, I can see Mansi. Yeah.
Yes, please. So, like last time, we learned about how sports data is maintained and how can we analyze that data and predict which player can play well for the next match. And I learned about how we make charts from Google Sheets.
Yeah, that was something new.
Yes,
Yeah.
please.
It's interesting to know that how much we can do from the digital tools we have. Yeah, okay, that's great. You want to add on something else also, Mansi? Okay, perfect. Okay, so today what we'll do is we'll move a little bit ahead. Uh, Now we know that how sports is linked with tech, data, and science. Uh, like on the surface, we just see that okay, it's just players are playing cricket, we are enjoying the match. That's it. But you see how much goes behind it, not just in terms of science and technology, but also the finances. So you see, all these players, they are so talented. But is it just for talent that they play these matches, or is it also that they have to earn? Yeah. So, of course, like all of us are talented in something or the other, but then we need funds to really sustain it, to really, be able to do better in it. So today's class is more oriented towards how sports is interconnected with finance. So we'll look at that. And for that, let me share my screen with you all. Yeah, can you all see my screen?
Yes.
Okay, perfect. Yeah, so what we'll do today is we will try to understand how sports and finance are connected, right? So we see you know there's a lot of intersection which comes into play when we talk about sports and money. You see, these athletes, they win medals, they are playing big matches, but have you ever wondered who supports them financially? Yes, Lakshmi, go ahead.
Agencies, companies, like we see the stickers of on their t-shirts, so the companies are sponsor that.
Absolutely, absolutely correct. And that is what we'll explore today, that how financial support can shape an athlete's journey. Yeah. So we'll start with a quick activity. Uh, it'll be an icebreaker activity wherein what you have to do is, so can you just think of any famous athlete, you know, it can be anybody, be it in cricket, badminton, tennis. It's very easy. Anybody can name the famous athletes they know. Yes, Sejal.
Mithali Raj, she's
Yeah,
a cricketer.
correct. Yes. Anybody else wants to share their favorite or the athlete they think is very famous? Yes,
Mary.
Sanya.
Smriti Mandana.
Correct. Go on, Mansi.
So Mary Com came in my mind, please.
Yeah, perfect. So that's actually correct. And now, can you tell me, do you think they earn only from playing or from something else too? Yes, Lakshmi.
Uh, yes, they earn apart from that, the matches or the thing they do, like from the ads or some like sponsorship.
Correct. Sejal and Mansi. Sejal.
Yes, my answer was the same as Lakshmi, that they earn other than playing the matches and earning. They also earn through collaborations, and I think they also run that. Most of the athletes start running their own institutions and provide coaching.
Yeah, right. Correct. Mansi, you also want to add?
I had the same answer as Didi's.
Okay, that's actually right. All of you have shared the right insights over here. So, that's actually what I wanted to hear, and that's exactly the point. So many of the sports people, the athletes, they earn through brands, ads, and sponsorships, like you mentioned. And that's what we'll understand today. Like all the Instagram ads we see from Virat Kohli, those ads are sponsored by Puma or the brand wrong. So he really gets the money through that as well. But at the same time, he has to promote it. So that is what you see, you know, how sponsorships they work, the ads, the brands they work. And so, can somebody tell me what exactly sponsorship is? What do you really understand from sponsorship? Can be a random guess. Yes, Danish.
So sponsorship is like a particular player is getting a sponsorship of that product for a certain limit of time. For example, the period of duration that he or she signs the deal. So that person will be only promoting the product through like photograph campaigns and video, TV ads, Insta shots, and etc.
Absolutely correct. So that is what, you know, sponsorship is. So in simple words, sponsorship is when a company or person supports an athlete with money or resources. That's the most simple explanation for it. And in return, the athlete has to promote their brand. So, for example, like somebody mentioned in the beginning, how we see the cricketers wearing these jerseys, which have a lot of logos of different brands. So, if a cricketer wears a logo on their jersey, that's because of sponsorship. Yeah. So, moving forward, can you tell me why do athletes need sponsorship over here? Yes, Sejal.
Uh, I guess because a lot of time these companies fund their logistics, so that is why they sponsor.
Yeah, so that is definitely one of the reasons. And like if you really think about it, it's because talent is not enough. Yes, Mansi, go ahead.
Yes, please. Like they pay sponsorships to motivate the player. so that he can pursue his career as well uh, in the sports.
Yeah, that is also a good point. Correct. So, all the answers are correct. And over here, we should also realize that how, sometimes it's not just talent which is enough. Uh, Athletes also need money to sustain themselves. So talent is important, but without money, it's very difficult to continue. So we'll see how sponsorship helps. Uh, Moving further, I think we should really understand it with this video. This will really help us understand the types of sponsorships that the sports people, receive. Yeah, so can anybody tell me what were the like different types of sponsorships we just saw? Yes, Lakshmi.
Venue sponsorship, like a place for a practice or giving a place for a certain work.
Correct, absolutely. Jasmine,
Team sponsorship and venue sponsorship, athlete.
correct. Hmm. Absolutely, very nice. How about you, Mansi?
Yes, please. Team sponsorship where individual or companies pay to the whole team for playing the match, and event sponsorship where someone sponsors the whole event or the whole match. And third one was athlete sponsorship where maybe they sponsor individual athletes, not the whole team or event. And venue is about they will be providing the venue or something like that.
Yeah, correct. Uh, Correct. So that is actually very much true. And you see, whenever you see cricket match, and when we see the cricket match on TV or wherever, so the stadium that we see, it has a boundary wall around it. And on boundary walls, sometimes there are a lot of different advertisements of different brands. So it could be that those particular brands have been sponsoring that particular venue. So yeah, so sponsorship can be in many forms, money, equipment, or even training support. So let's try to look at now how sponsorship really helps our athletes. So number one is definitely, access to quality training. Uh, I mean, it helps them get better coaching and training. They get high quality equipment. Even travel expenses for competitions are covered when certain sponsorships are, provided. And most importantly, they can focus on their, sport without worrying about money. So that also becomes very important. So just imagine, trying to prepare for a big competition while, really worrying about all the logistics behind it. It's tough, right? We all have been through it. Like whenever there's an exam, some entrance exam, and we have to reach the examination hall on time. And if the logistics are not arranged, if we are not able to commute and reach on time, it's really worrisome. We get so anxious and stressed out. Okay, how will this happen? Because I have also been through it. At last minute, all the challenges coming in, not getting the right commute towards the center, and getting all stressed out about it. So imagine, if there's a competition like this, and then you have to worry about so many things. It's tough, right? It's tough for everybody. So that is how the sponsorships that the athletes get, they take care of all these things as well. They support the athletes. They also try to support them with travel. They help, cover their travel costs. So that really makes life easier for them so that they can focus on their tournament smoothly. So these are a few examples of sponsorships you see over here. Yeah, so that is what I really wanted to, introduce you today, that how sports and finance are connected. Now, I would also request our change maker Advika to really take it forward from here. She will be focusing more on the financial and economic literacy aspect of it. So, over to you, Advika.
Yes, ma'am. Just a second. I'll just share my screen.
Sure.
Also, ma'am, one more person is joining along with me. That's fine, right?
Yeah, okay.
Yes, just one second.
Can you also come on camera, Advika?
Yes, just one second.
Yeah.
Okay, I just want to ask if my screen is visible.
Yes, it's visible.
Yes, okay. So, good evening, everyone. My name is Advika, and I'm going to be talking about something related to economics and finance. So, first of all, I want to ask, what do you guys know about a startup? Do you know what a startup is? You can do a thumbs up if you know what a startup is. And if you want to answer, you can just unmute and let me know. Okay. Thank you. Okay. So basically, a startup is a new business which is created by someone. It is a very initial stage of a business. It focuses on developing unique ideas and technologies and also introducing them into the market in the form of a new product or service. So what does startup valuation mean? So this is basically, it helps us to understand how much a startup or a new business is worth, in the sense that how much money will you pay to buy this business. And it is a very very difficult task because startups are very new and it may not have a very long history of income, so you cannot see their records or see how much money they've made in order to understand how much it's worth. So basically, these businesses, what they do is they aim to grow and succeed in the market over time. So, in simple terms, a startup valuation answers the question, if someone wants to invest in or buy this business, how much should they be paying? So, the value of a startup depends on how well the business is performing and its potential to also grow in the future. So, if it's a promising, if it's a good idea, we know that in the future it'll grow, it'll get more business. So, a simple way to again understand this, money equals work, which means that if a business is working well, earning profit, and growing, it becomes more valuable. So, the more work you're getting, the more valuable your startup starts to become. So, now there are five very important factors which influence a startup. So first is basic value, second is technology, then there's execution, strategic relationships in the core market, and production and consequent scales. So basically, basic value is just the general value of the startup as it's starting. The technology is how much technology is used, how many machines are used, what is the technology really good or is it bad. Execution basically means how well the person who owns the startup is executing their things. Like if I'm a parle G producer, how well am I making my parle G? Am I making it on time? Are all the people that are working for me doing their job properly? And then strategic markets or strategic relationships in the market basically means the customers or the partners that the startup has. And the ability and production and consequent sales basically means, can the startup produce and sell as well, which means if I'm just producing, if I'm only making 300 400 packets of Parle G, but I'm not able to sell it, so that's not production and sales, that is just production, which leads to loss. So does anyone have any questions about what a startup is? No? Yes, Mansi.
I don't have question about startup, but I
Okay.
would like to know the meaning of Berkus, please. BERKUS.
That's just a name which has okay. Berkus, I forgot to mention, is just a name which is given to the five, like, okay, so startup valuation is understanding the value of a startup. So Berkus came up with this method where he thinks of the where, so basically there's five key factors, and that person thought that okay, a one good way to evaluate a startup is to judge them by these five factors. Does that make sense? That doesn't mean anything, it's just the name of the approach of evaluating the startup. So this was the first method which we saw. Then there's another method called cost to duplicate approach. So this method basically calculates how much money has been spent to build the business so far, including the equipments, materials, and the setup costs. So this gives a basic idea of the value. It has limitations, however, because it does not consider the future potential of the business or intangible things like brand value or goodwill, patent rights, or anything like that. So basically, cost to duplicate approach, you take into account all the costs and expenses which the owner of the startup has taken. So getting the machinery, getting all the raw materials and everything like that. And that's it. That's the valuation of your startup. So if I have spent 30,000 in starting my startup, with this method, the value of my startup will only be 30,000. Not that, okay, acha idea hai, maybe in the future it can grow to 60, 70,000, or not that, okay, I'm goodwill basically or patent rights, which means if I'm selling an original product of my own, I have to get a certain copyright or something like that. So this does not account for any of that. It's basically jitta money you have put into it, that's the money that you're going to get as your valuation. Okay, does anyone have any questions about this method? Okay. So the next one is called as the future valuation multiple approach. So it's a very, very long name, but it basically focuses on the future earning potential of the startup. So in this method, we can estimate how much the business can grow over the next 5 to 10 years in terms of their sales that have happened and the profits. So based on these assumptions, or based on how much potential we see, investors can then decide, investors means people who are giving putting money into your business, can then decide how much return they can expect. So if my company, if the investors think that the company has great potential to do well in the future, they know ki acha, if there's good potential of the business, which means my returns will also be pretty good. So if a business is expected to earn more in the future, it is considered valuable. So the earlier method was the opposite, ki how much money you have put into it is how much money your startup is worth. But this approach basically is the opposite, which means that how much money you can get in the future, based on that, they'll evaluate your startup. So, future valuation. So, in the future, how much will it cost? Okay. Again, any doubt anyone has? No doubt. Okay. So can someone just quickly explain to me the difference between future valuation and cost to duplicate approach? Very simply, what you've understood in okay, yeah, Lakshmi.
cost duplicate approach basically consider the other expenses which we made for our company, like raw material or rent or other things. And future valuation multiple approach is consider like the acceptation about like or assumption that our sale will grow by this much percentage in within that much year.
Okay, correct. So I'll go on to the next approach, which is called market multiple approach. So now this is calculated using the recent transactions or the recent things that you have got, which are related to the startup. So basically, so by looking at how much the similar, so right. So by looking at how much those similar businesses were worth, we can estimate the value of the current startup. So this method is very useful because it uses real market data to guide the valuation. So basically, for those of you who don't understand, it is basically in the market there are many businesses which will be like yours. If I do a tiffin box service where every day I will give whoever my customers are at 8 o'clock at night, I will give them tiffin. That's my business. Okay. There are a lot of people doing something similar as well. So market multiple approach, basically your evaluation is very similar to other businesses that are also over there. So if I've just started this business, so obviously I won't have that many customers. But if someone has been doing this for 3, 4 years, they have a very similar business. They also give tiffin. Maybe they give tiffin at in the morning time instead of the night time. Maybe their menu is a little different, but their startup is evaluated at say 60,000 rupees. So I'll get a similar evaluation of my startup because it is in the same market. So that's what this means. It is calculated using recent transactions which are similar in nature to the startup. So startups which are similar, their transactions, what they buy, what they sell, according to that, it will be evaluated. And then there is, yeah, there is something called as the risk factor summation approach. Summation means like the addition, the adding everything. So this considers the risks which are involved in the business. So in this method, first we will estimate a basic value by using any of the methods given above, and then we'll adjust that value by either adding or subtracting different values based on the risk. So basically, we can use any of the approaches. So cost to duplicate approach, or future valuation multiple approach, or market multiple approach, or the Berkus approach, which was those 5 things by which you can evaluate a startup. And then we'll either add or subtract the risks that can take place to the evaluation. So these risks can be management issues, political problems, technological challenges, competition from other markets, and financial risks as well. So, if the business has very high risk, the value decreases, and if the risks are low, the value will increase. Obviously, if your business has a lot of risks in the sense that there are some political things going on as well, then there is management problem, you don't have the technology, the value of your startup will not be as high as another startup who has good technology, no political problems, and good finance, right? Does that make sense? The higher the risks, the lower the valuation of your startup. Okay, so in conclusion, startup valuation is about understanding the current situation and its future potential. A startup is obviously considered more valuable if it has a very strong idea, excellent execution of what needs to be done, good sales, good growth, future potential, and low risk. So the main idea to remember from this is that a business is worth a lot more if it is likely to succeed and generate good income in the future as well. People don't just look at the present, they look at the future as well, because in the future a lot of things can happen. So it's very important to take into account what's happening in the future as well. So does anyone have any questions? One second. Any questions? Yes, Lakshmi. Lakshmi, do you have a question?
Yes, please. Do we have any parameter for a risk factor summation approach?
So the risk factor depends from like different types of risks. So for one person, a management risk might be more of a problem than a financial risk. Like for an investor, if I'm an investor in your company and I see that you have a very big financial risk, for some people maybe the financial risk is slightly more okay than a management risk. So it depends from person to person and whoever is investing. So there's no fixed parameter ki okay, management risk means this much, or there's no number that you can assign to it. It depends when you're evaluating your start. Any other questions? No. Okay. So now I'll give you all a startup, I'll give you all an example, and you all tell me if this is a good business, and what that person can do to increase their profits. Okay. Okay, so this is a guy. His name is Ravi. He cooks homemade food, like my tiffin service. Ravi also has a tiffin service. He cooks homemade food and he delivers it to people, to office workers when they are at the office. So these people have to wake up early in the morning, 9 to 5. So they need to leave their house early because they live far. So what Ravi does is he cooks at his house and he goes and gives it to all of these office people. So the basic, okay, so the initial money that Ravi has put into this business, so in getting all the supplies, the getting the food, all of that, was 20,000 rupees. He has 25 customers right now. The price of each tiffin is 80 rupees for lunch. He only gives lunch, and he gives these people food 25 days a month, not the holidays, 25 days a month. So so basically his monthly income becomes 25 customers into 80 rupees into 25 days, basically. So number of customers into working days into price per tiffin, which I've done the maths, comes down to 50,000 a month he is earning. Okay. Remember that the initial money that he has invested or to start the business by himself is 20,000 rupees. Okay, let me know if you all want me to repeat anything, because there's a lot, like there's a few numbers, so it could get a little confusing. Okay, so then his total monthly expenses, okay, so he earns 50,000, but there's expenses as well in the month. So his monthly expenses are groceries, gas and electricity, and delivery cost. For these people, monthly expense, monthly khud ka kharcha is around 35,000 rupees. So he makes 50,000, and 35,000 is the amount that he needs, the kharcha that he needs to do in order to fulfill these people's tiffin ka thing. So the profit that he is left with in the end is 15,000 rupees a month in the tiffin service. Okay, so now one by one, if y'all can tell me, do you think this is a good business? Why or why not? Do you maybe see potential in the future? Maybe if the gas prices rise, he can raise the price of his tiffin, or do you think as he gets more customers he can increase the price, or maybe for delivery he can okay, just tell me what you all think about this. Do you think it's a good business? Yes, Seja.
I have a question. So, is he doing this? Is he only doing this business, or is he doing something part time as well?
No, only this. He's starting a
Okay.
startup. He only does this. We're talking right now only about the startup. So even if he does do something else from a startup, let's take into consideration that he is not doing anything else. He's only doing the startup. Okay. Okay, Jasmine, what do you think?
Okay, so I think it's a good business because he earns a profit. Like he invests 20,000, and at the end of the month he has 15,000. So
Okay.
even in the future, he can rise his price of the ticket. so he can earn more.
Okay, Sejal, yes. Mansi, yes.
So, like as you said, it's a startup, so he can keep this price for several months or years. After that, he can. I'm so sorry.
No, no, no problem, no worry.
So, in future, as his business is continuing or he is earning more profit, he can raise the price since he will be having loyal customers as well.
Correct. Okay, if the people like his food, they will get from him only because he's giving. Okay, Lakshmi, what about you?
Yes, please. Yeah, it is a good startup or bad. It depend on different factor. For
Okay.
right now, it is like he is selling the particular unit for particular price. But once he have a most customer, then he can sell the more quantity at same price because there is a economic of scale.
Okay.
So he can have a more profit.
Correct. Right. Yes, Sanya.
So according to me, maybe he will face some losses in several months, but after that, like if the customers are fixed in amount, so he will keep that amount or increase such some amount for the tiffin boxes, and after that, he will get some more profit than these months he is getting now, right now.
Correct. Okay. So I see that each of you have used different methods. So um someone has used the future valuation multiple approach, which means you're seeing ki, okay, future may maybe he'll get some more. Some of you are saying that he's invested itna money, so he's getting 15,000, so it's good. That's a good amount. Then some of you are so basically, you all have used all the different methods that I have just explained. So, correct, it is a good business. It has potential to grow in the future. He has put 20,000 in it and he's gotten 15,000 profit in the first like month or few months itself, which is very good, very rare. Doesn't, you never know, it may or may not happen. So, always remember this when you're trying to, if you're thinking of starting something, or keep this in mind. If there's a lot of risk, maybe wait for some time till there's little less risk, and think of all the different factors that you need to take into account. So now there's another small topic for all of you. So Sarah is one of my friends and she is going to be explaining exchange rates to all of you. Okay.
Okay, so an exchange rate, if you make it really simple, it's like the price of a particular country's currency in terms of another country's currency. Like $1 currently is around 83 Indian rupees. So ideally, you would have to pay 83 so that you get $1 back. And exchange rates is, like the presentation says, is the value of a nation's currency compared to another. Now, exchange rates are very important. They affect travel, imports, exports, online shopping, the economy. Now, travel wise, your money, like let's say tomorrow I decide to go to the UK. So in that way, I have to think now. I when I go to the UK, I'm going to spend in pounds. I can't spend in rupees. So I need to take my money in rupees. Then, according to the exchange rate, I get the pounds, and then I travel. Even imports exports wise, if India is importing, then they pay in the other country's currency, whereas if they're exporting, the other country will pay us back in Indian currency. And on the basis of imports and exports, the strength of your currency is going to fluctuate. And then again, economy wise, you have inflations, you have jobs, business growth, and exchange rates affect all of them. Now you have two different types of exchange rates. You have your fixed exchange rate and you have your floating exchange rate. So just by the name, does anybody have any idea of what fixed and floating exchange rates could be? Yes, Sejal?
Can you repeat the question once again?
Just by the name itself, what do you think a fixed exchange rate and a floating exchange rate could be?
May I try?
Yes,
Yes,
Sejal.
sure.
Thank you. So fixed rate of exchange, the rate of exchange
I'm sorry, could you repeat that? I couldn't hear you.
Uh, Hi, Sejal, are you there? I think she must be facing some network issue, Sarah.
Yes.
Jasmine, you can try as well.
Yeah.
Yes, please. So maybe fixed exchange rate means it will not change. It will be at the same price, like, and the floating exchange rate may it will be keeps on changing and fluctuating rate.
So somewhat, yes. So your fixed exchange rate is the exchange rate where the government is controlling the value of the currency. And they do this by tying it to the value of another country's currency. Like, let's say, tie the rupee to the US dollar. And your floating exchange rate is where your value keeps changing on the basis of demand and supply in the market. So if you look at India, India uses the floating exchange rate system. So on the basis of your import export, the strength of the rupee will increase or decrease. Now, other than other than just import and export, a number of factors cause the fluctuation in a floating exchange rate. Like, let's say, demand for currency. If you have more tourists coming to India, there's more demand for INR because, again, you can't use, let's say, a yen to buy something in India, right? So, the greater the demand, the greater the tourism, the more the strength of the rupee. So, it will increase in the sense that then the value of the dollar to the rupee will begin to decrease because the strength of the rupee is increasing. Then you have inflation. Now, the more the inflation, the weaker your currency is. And inflation is a problem that we're facing throughout the world right now, which is why the strength of currency keeps fluctuating. Then you even have interest rates. The higher the interest rate, the the weaker the value of your rupee. And then you have politics, political stability. The more stable your country is, the stronger your currency will be. If your country isn't politically stable, that's basically the basis for strong currency. So if like to make it very simple, if a lot of people want it, the strength increases. If not too many people want it, then the strength will decrease. Now you have the determination of exchange rates. Now you don't randomly wake up one day and decide this is what the exchange rate is going to be. It's mainly decided by your demand and supply in the foreign exchange market. And the foreign exchange market is basically a global marketplace where currencies are traded. So again, the more the people want the currency, the greater the value. The fewer the people, the weaker the currency is. Now, again, demand and supply is also affected by trade because if you export a lot, then your rupee will strengthen. And if you import more, then the rupee begins to weaken. Then again, interest rates, as I said, the greater the interest rate, the more money is coming into the country. And if more money is coming into the country, that means your strength will increase. Then again, inflation, more inflation, weaker the currency. Then you have investment as well. Now, I- if if you look at investors, a very common currency to invest in again is the US dollar. So if global investors decide to invest in the INR, then the rupee rises. But if they pull their money and they decide, I don't want to invest in this currency anymore, then again the value of the Indian rupee will begin to fall. Now, the government and central bank can step in by buying and selling dollars to control the extreme changes in the value of the currency and the change in interest rate. And then again, political stability and the confidence in itself of the country will also affect it. Now, exchange rate movement, right? Now, exchange rate movement is again free floating or fixed. Now, it's affected by demand and supply of foreign exchange and then even balance of trade. To be stable, you need your imports and your exports to balance out. You can't keep importing because then your value keeps going down. and then inflation, interest, capital flow, stability. And so exchange rate movement is determined by market forces of demand and supply, and that is influenced by political, economical, and financial factors. Then now you have the influence of the exchange rate on the supply and demand of goods. Now, let's say that the Indian rupee falls to like 80, 85 per dollar, right? Then the export will become cheaper for foreign people. Then the demand for exports will increase. And then the imports will become expensive for Indians. And then the demand for imports will decrease. So, in that manner, your demand will shift from your foreign good to your domestic good, right? Then, if the rupee rises, then your exports become expensive. And then your imports become cheaper. So, then you will tend to buy more foreign goods than you will domestic goods. So, exchange rates will change the relative prices, and that will shift your demand and supply. So, if your currency depreciates, then your demand for exports will reduce. Demand for exports will reduce, and your imports will increase, and vice versa. And so, does anybody want to summarize the factors that would influence exchange rates?
Okay, before that, very quickly, did all of you understand what an exchange rate is? Yes? Little bit, even if it's a little bit, it's okay. Little bit? Okay, I'll just explain what the exchange rate is. Like, very simply, basically, if I want to go to a different country, I cannot use Indian rupee over there. I cannot give them, okay, you take my 5 Indian rupees and you give me something, but that because that person is living in a different country, they do not accept it. So, an exchange rate, but basically, not every currency or every country has the same currency. In for us, in 10 rupees, you can get a Lay's packet. But over there, maybe in $1 in the USA, United States, in America, for $1, maybe you can get 10 Lay's packets. So here though I'm giving 10, but here I'm only giving one, which means there is some difference in both the currencies. So basically, that's what exchange rate means. If I want to buy $1 from the US, I need to give a certain amount of my Indian rupee to get that $1. Correct? So that is what an exchange rate is. Now, if I need to give a lot of rupees, say I need to give 100 rupees to get $1, don't you think the rate is a little high? 100 rupees for $1. Why will I do that? Right? That is a lot. But if I have to give 50 rupees for $1, then the exchange rate is slightly lower. Correct? Does that make sense? Little bit. So this high, low, up, down is affected by whatever Sarah has said, like the economic activity, then the foreign exchange, what other countries are giving to us, what we are giving to other countries, the interest rates, and things like that. Did you all understand now what exchange rate is basically? Yes? Okay. Any doubts, any questions? No? Okay. Ma'am, is the time up?
Yeah, we are at 7. We can take 3 minutes to wrap up.
Okay. Yeah, Sarah, you can. I mean,
Yes. So now let's say that you're a tourist, okay, and you're going to the United States. Okay. So now some of you, let's say, are exporters, let's say some of you are importers, some of you are foreign buyers. So if you're a foreign buyer, would you buy chocolate in the United States? If let's say the chocolate is $1 and $1, let's say, is 100 INR. So would you buy chocolate over there? Yes.
basically, one chocolate is 100 rupees over there. Will you buy?
If you will, put a thumbs up. If you won't, put a thumbs down.
So what is the cost of that chocolate in INR? Like it is 100 or it's cheaper?
Over there, you're paying 100. You're going over there, you're paying 100 rupees, you're getting one chocolate. Just tell me, would you buy it or not?
Like it depends upon situation. Like if I have no option, I will buy definitely. But if I am comparing it with INR, I would choose if chocolate is cheaper in India, so I will buy chocolate from India, like which
Correct.
is
Yes.
cheaper.
Exactly. And I see a lot of thumbs downs, which means that the demand over there is a little less. And then, like I said, your demand will affect your exchange rate, right? But now, let's say you go over there and there is a yoga mat for like $5 and it's more expensive over here. Then it would make more sense to buy it over there, right? So then the demand for that will increase, and then that will also affect your exchange rates. So it's all of these, like when you as a person, you go and you make a conscious choice to buy or not to buy something, it may just be a choice for you. But depending on that choice, the strength of currencies is also fluctuating. And that's basically what exchange rates are. I think that's good.
Okay. Thank you so much, everyone, for listening to both of us. If you didn't understand anything, please you can let us know now as well, or you can reach out to us. Anything is okay. Make sure everything is clear because these are important things which will help you in the future if and when you start your own business or you start working or anything like that.
Thank you, Advika. Thank you, Sarah. Do we have any questions for Advika and Sarah? Feel free to ask. It could be a very minor one. Just get your doubts sorted before we wrap up.
Yes, Mansi.
I would like to thank like for explaining the exchange rate so simply. Thank you.
Of course, of course. Okay, no doubts other than this. I mean, nothing else.
Okay, I think we can wrap up the session over here. Thank you
Yes.
so much, everybody, for your time. Thank you so much.
Thank you, ma'am. Thank you,
Okay,
everyone.
no worries. Bye bye. Thank you so much.
Bye bye.
Thank you so much for the session.
Bye bye, everybody.